and you're very welcome to this video in our series on Unit 4 for Leaving Certificate Business. And in this video, we're going to look at the similarities and differences between business and household taxation, the effects taxation having a business, and then we'll look at a few just tidying up definitions in our last video on tax, so defining tax rates and what tax credits are as well. So now we're going to look at the similarities and differences between households and businesses and the tax they pay. So the similarities, well, individuals or households have to register revenue, as do businesses. They have to keep proper financial records. They have to look. They're going to try and reduce the amount of tax they're going to pay legally. What's that called? Tax avoidance. Yep. They're going to cooperate with the revenue commissioners who collect the tax, and they're going to consider the timing of their payments when they're planning their cash flow as well. So they're not going to have to try and pay their tax when they have very little money in their accounts. They're going to try and time it in a way that's going to suit them best. Some of the differences, well, obviously different taxes for households and different taxes for businesses. There's different collection systems used for both households or for businesses. Businesses have more tax allowances, so more ways to legally reduce down their tax bill. Business can also claim VAT refunds as well. And last thing as well, business also acts as a tax collector as well, for example, in terms of VAT, or different excise duties as well, for example, on cigarettes, alcohol or petrol, under sugar tax as well. So there's different taxes that the business act as a tax collector and then gives the money on to the government. So, how does tax affect businesses? Well, it lowers their profit, obviously enough, doesn't it? Because reduces the amount of profit the business can have, because it has to pay some of it in corporation tax. For that, reduce the amount that can be reinvested into the business, or given to shareholders in the form of dividends as well. Taxes also increase business costs, because business collect a large amount of taxes, as we discussed, like VAT, on behalf of the government, or sugar tax, excise duties, etc. That increases the administrative costs experienced by the firm, and you often need an accountant to help with that, or someone that's highly skilled and able to complete these administrative accountancy-based tasks, which also increase the costs even more. It can also result in higher prices as well, because once taxes like your VAT, excise duties, etc. are put onto the good, that's going to increase the selling price, making it more expensive for consumers. If it's more expensive for consumers, they're less likely going to demand the good or want to buy the good, because they're less disposed to purchase these goods and services, or other goods and services, meaning they have to make choices. There's also incentives as well. Low corporation tax and tax breaks mean it's going to encourage business to set up here, so multinationals come here to this country to set up, or as well for business to expand as well. Incentives reduce the cost for business and increase the profits for the business therefore as well. Now we'll look at the idea of tax rates. Okay, so we're aware already from a previous video, income tax or PAYE is taxed at two different rates. Okay, currently the rate now on the standard rate cut-off point is 20%, and the higher rate is 40%. However, this may change in the budget and in the annual budget, so be sure to check what the latest figures are for you. The standard rate cut-off point at the moment in Ireland is 20%, is at the tax rate of €32,800, and the higher rate, 40%, applies to the balance or everything earned above that. Tax creditings, on the other hand, reduces the amount of tax that a person has to pay. So it's an allowance, and it's based on everyone's individual personal circumstances, which can change from year to year, by the way. So, for example, like if you're married or still partners, or your employee tax credits, so there's different types of tax credits available to people. I say they reduce the tax liability, and it's calculated based on the gross pay. Any unused tax credits in a pay week or month are carried forward to the next pay period, so next week or next month, within the singular tax year. And there are loads of different tax credits. For example, there's the blind credit, dependent relative credit, guide dog allowance, home care credit, incapacitated child credit, £1 family credit, PAYE credit, widow or widow's credit. There's a credit for nearly everything you can think of, and you can go onto Revenue's website. You can look up in the My PAYE Anytime section and look at all the different types of tax credits that are available, and you can apply for those tax credits yourself as well if you're a PAYE worker. So folks, that brings us to the end of the video, where we've looked at the similarities and difference between business and household taxation, the effects of taxation on business, what tax rates are and what tax credits are. Hope you enjoyed this video. If you have any questions, ask below in the comments. If you enjoyed it, give it a like, and please subscribe to the channel as well. Thanks very much for watching. See you now. Bye.